Welcome back. You're tuned into Market Fatafat, and we'll take forward all the stocks that are buzzing away in trade. And for that, we are joined by Foram M.Chheda, who's the founder of Chart Analytics on the technical side. And of course, we have Lisa back again from the research team. Foram, hi, thank you for joining us today. Coming to you, your first pick is Power Grid. Now, power stocks have been in focus for a while now. In fact, Power Grid today has knocked down a good 3% in trade, but in the last 6 months, it has given good returns of more than 50% odd. What is penciled in for the charts? What is it? Do you see more upside on the stock, or is it time to really hold on or book profits?
Well, hi, good afternoon, and thank you for having me on the show. Well, as you rightly said, that the sector has remained in focus and has seen a lot of momentum and has been trending as well. So I have picked up this particular stock because this stock overall has seen a decent return and consolidation. So when we talk about in this year itself, the stock has moved nearly 27% in the month of January, from 226 levels to around 289. Thereafter, this month we have seen a good consolidation and in a range from 289 to 264, where it has taken support and gradually seen moving up and resuming in an uptrend. Yesterday, the stock did make a breakout from this defined resistance of 289 and it closed higher. However, today, because overall markets remain under pressure, and along with that, the stock has also seen some of down move, that is, it's down by around 3%, gives the opportunity to buy this particular stock. When we talk about the volumes, also very good increase in volume when the stock price was rising. So overall decent accumulation seen, and weekly charts also look very good and bullish since it's forming higher tops and higher bottoms and a good strong closings on a weekly basis as well. So I have a buy at current levels at around 283. One can maintain a very small stop loss of around 277 and look for a higher target of 315. So the risk reward is also very favorable, and one may face some resistance near 289, but once those levels are surpassed, 315 are on the cards.
Alright, that was the take coming in on Power Grid. But moving on to another buzzer in trade today, All Cargo Logistics. That stock is in focus today, and that is on the back of the operational updates that have come in. The LCL volume for January 2024 has witnessed a decline of around 3%, versus January 2023 and December 2023. Now, the Red Sea impact has delayed the shipments, leading to the January 2024 volumes being reduced. Now, the container utilization also continues to remain rather range bound on account of muted volume growth. The FCL volume for the month of January 2024 was up 10% as compared to January 2023, but largely, the numbers have not been shared by the street. We can see a knock of more than 1.5% coming in on All Cargo Logistics.
Alright, let's shift focus and talk about the technicals. Forum, you've picked out Poly Medicure for us, and well, in the last 6 months, the stock is up 16%. So tell us what upside, if any, are you pointing out for this stock, or how does it look like on the charts?
Well, technically, actually in December, the stock price has seen a correction of nearly 17 to 18%. From the highs of around 1677, the stock price fell to around 1380, 1384 levels. It stabilized there, and after that, we've seen a good, decent rise. However, this rise also was somewhere around first week of Feb, and after that, the stock price was clearly consolidating. Now, yesterday, what we saw, the stock price closed very much above that resistance level on a trendline basis, and it closed up by around 3.8% up. Today, again, the stock price has been down and is down by around 2%, but yesterday's volume has made the stock look quite bullish. It has seen some kind of an accumulation happening, and thus it triggers a buy at current levels since it's down at around 1580, 1588 levels. One can maintain a stop loss below the levels of around 1540 and look for a higher target of closer to 1800.
Alright, that's a buy rating coming from Forum on Poly Medicure, but let's talk about one stock without which we actually do not culminate this episode of Market Fatafat, and that happens to be Paytm. We mention it once at least every day. Let's talk about what's happening with Paytm. Yesterday, we had a source-based news flow saying that Paytm is looking to collaborate with 4 banks for its payments division. On the back of that, today you have got UBS that has come out with a note. They've gone ahead and they have cut the target price for Paytm to 510 rupees from the 650 rupees a target earlier. However, they have maintained their rating at neutral. They expect a 15 to 20% churn in merchant and customer bases. They also expect the material financial impact of RBI action to hit Q4 earnings for Paytm. The word coming from there is they believe that in the near term, Paytm will only be able to reverse the impact of RBI's action to a limited extent and not more than that. And negative regulatory action has dampened investor sentiment, which limits any re-rating in the company. That's the word coming in from UBS on Paytm. And on the back of this brokerage note, that stock is down and out 5% today as we speak.
Right, Forum, coming to you, you have picked up Castrol for us. Tell us what are you seeing on this counter? It hasn't really done much in the last 6 months, really, for the investors. What are the charts saying?
Technically, I'll first talk about it from a broader perspective that on a weekly as well as monthly charts, there has been exceptional volumes. That since December, the volume has been nearly 10 times of what its average trading was. So that in fact said that there is some accumulation happening, and that actually resulted the stock price to move up from the levels of 140 to around 205. Since then, we have seen some kind of to and fro in the price, and the stock went up very higher, closer to 212, and again it's retraced back to these levels of 200. So these levels are indicating a good support level. On a daily chart basis, the stock has been forming higher tops and higher bottoms. So overall, the trend continues to remain up, and the stock is comfortably moving above the multiple moving averages of 50, 100 as well as 200. So overall, even today when it's down 3% does not mean that it's weak. In fact, it gives a chance or an opportunity to buy the stock. One can maintain a stop loss below the levels of closer to 192 and look for a higher target of closer to 220.
A buy call coming in from Forum for Castrol. But Lisa, let me come to you now. Let's talk about a recently listed IPO, that's Capital Small Finance Bank, and the stock is in focus, I believe, on the back of its numbers.
Right, Snehi, the stock is reacting on the back of a weak set of numbers that it posted. If I look at the net profit that rose around 2% on year-on-year basis, and that was largely led by the other income as well as lower bad loan provisions that was undertaken. The net interest income that grew on a flat basis. It was just 1.3% up on year-on-year basis. But what needs to be highlighted is the asset quality, which weakened because the GNPA that rose 24 bips on quarter-on-quarter basis to 2.9%, and even the net NPA that increased 17 bips sequential basis to 1.5%. So that is why we can see the stock reacting negatively. It's down around 5% as we speak, and even since its listing 2 weeks ago, also the stock is down around 12%.
Right, coming to you, Forum, then HAL is what you have picked out. This space, defense, aerospace, has been yet another space that's been in news, has been buzzing. Last 6 months, the stock has given more than, it has doubled. What are you penciling in on the charts? How do you play this counter now?
Well, this particular stock has already seen a very stellar run. When we talk about it a few months back, that in October the stock price was trading at 1760, and then it moved up closer to around, that is closer to 3010 levels. That is nearly 70% up move in the 4 to 5 months. After that, we did see the stock taking a breather and went into consolidation, and even right now it remains under consolidation. However, on the volume front, there is some accumulation seen, and in fact, on a daily chart, the stock price is making an attempt to break out from a downward sloping trend line, that is its resistance level. So thus, these levels look good technically to buy at current levels. The stop loss can be maintained below the levels of around 2960, and one can look for a higher target of closer to around 3450.
All right, thank you so much for that. That was a take coming in for HAL. But moving on to another counter that's buzzing away in trade, and that's Texmaco. It's taking a knock of 4% in trade today, and that's the news flow is that the railway firm has said that the board of directors has approved the plans to raise around 150 crore rupees through a preferential issue of convertible warrants to its promoters and promoter groups. Now, the board of Texmaco Rail has authorized its capital issue committee to finalize the structure, terms and conditions of the issuance as well as the other related matters. Now, remember, before this fundraise, the company had raised 750 crore rupees through a qualified institutional placement, which included a green shoe option of rupees 200 crores. On the back of that news flow, we do see some selling pressure coming in on Texmaco Rail. It is knocked down in trade 4%.
Well, all right. With that, viewers, it's time to slip into a short break. But before...
Welcome back. You're tuned into Market Fatafat, and we'll continue with all the stocks that are buzzing away in trade. Coming to you, Forum, you've picked out Saregama for us. Well, this particular counter, if you look at the last 6-month returns, has given a return of only 8% to the investors. Nothing much happening there. What are the charts saying now? Are the tables going to turn?
Well, it seems to be turning. Speaking about technically that in this month itself, the stock had formed a base near these levels of around 340, and even in Jan, it was near those levels. The stock price has stabilized at 340, and after that, we saw good momentum. However, the stock price was facing some resistance near 400 levels, which it took off, I think, in the middle of this month, and it moved higher. In fact, it was a good buy even yesterday, but some profit booking was seen, and today the stock price has seen some kind of a retracement near the, and it's down by around 1%. Talking about the volumes, which is the most interesting part of this particular stock, there has been genuine buys and accumulation that can be seen in the past few couple of days, which indicates and looks quite attractive for the stock, not only from a momentum perspective, but also from an investment perspective. Thus, one can consider buying the stock at current levels, add in more if it comes down to around 405, can maintain a stop loss below the levels of around 397, and can expect a higher target of closer to 450.
Foram, thanks for that. We're going to take a quick detour because the Supreme Court has pulled up the center over rising disparity between rates of government and private hospitals. The court also said if the center does not come with standard rates in a month's time, it may think of ordering to implement the CGHS rates in all hospitals. Anurag Shah, my colleague, has more details on this. Anurag, hi, what are you picking up?
It's a very big development related to the healthcare sector. Supreme Court has asked a center to have a standard treatment charges across all the states. So Supreme Court was hearing a PIL file, and a bench led by Justice Gawai and Sandeep Mehta has asked center to come up with a standard treatment rate across the states because there is a huge discrepancy between treatment charges in private hospitals and government hospitals. So while hearing the PL, Supreme Court has observed that healthcare is a fundamental right of a citizen, and center should fix standard treatment charges within a month. So deadline given by the Supreme Court is also of a 1 month. So within a month, the Union Health Secretary need to connect with all states and come up with a standard rate. Otherwise, within a month, if center doesn't come up with a standard treatment rate, Supreme Court may think to apply CGHS rate, central government healthcare rates. CGHS rate can be applied across the country. So it's a very big development because there were complaints across the board regarding overcharging by the hospital, big discrepancy between rates of private hospitals and government hospitals. So in this regard only, Supreme Court has made a big observation related to the standard treatment charges.
Thanks so much for taking us through that. With that, let's get a move on and talk about GET&D. Now, the company has received major orders from Power Grid Corporation of India Limited, which, however, they say that is in the normal course of business. Now, these orders are worth approximately 370 crore rupees for the supply of 765 kV shunt reactors for Power Grid's various transmission system projects in India. Now, these projects aim to facilitate the integration of renewable energy into the national electricity grid and enhance the electricity transmission within the country, including the states of Rajasthan and Karnataka. Now, GET&D India will be responsible for providing the complete equipment package, including the design, engineering, manufacturing, testing, and commissioning of the 765 kV class reactors at the designated transmission substation sites. And while the reactors are scheduled for delivery in FY25 and 26, on the back of this positive news flow, stock is holding up with gains of 1% as we speak.
And well then, coming to you, Lisa, Bharti Airtel is what you have picked out for us. I believe it is coming on the back of a brokerage note. Do tell us what the note says for the counter.
Right, so Jefferies has a view on Bharti Airtel and they have a buy call on the stock at a target price of 1,300 per share. And they say as per the TRAI data, it suggests that Bharti Hexacom is favorably placed as its market that has grown historically by around 3 to 5% faster versus the rest of India. And the lower tele density that also offers a lower growth runway for the company. As well as Bharti Hexacom may see higher market share gains given Bharti's superior execution as well as Vodafone India's weak positioning, and that translates into a tariff hike into ARPU, which has been better, 17% ARPU CAGR versus 12% CAGR in ROI. So yes, that's the reason Bharti Airtel is in focus today on the back of the note coming in from Jefferies.
All right, with that, let's talk about what's buzzing at Byju's. And Byju's is formally closing $200 million of equity rights sale today. Now, remember, the NCLT had reserved its order on an investor plea against Byju's. My colleague Anurag Joshi is here with more details. Anurag, take it away.
EdTech firm Byju's will formally close a $200 million equity rights sale today. This comes on the heels of the National Company Law Tribunal reserving its order on an investor's petition against Byju's. Four investors, key investors of Byju's, had filed a mismanagement and operation petition against Baiju Ravindran last week. And one of the key demands of the shareholders is a stay on the rights sale and also reconstitution of the board and removal of Baiju Ravindran as the CEO of the company, calling him unfit to run the firm. Now, the four investors that had filed the petition are General Atlantic, Peak 15, Prosus and Sofina. Byju's had opened the rights sale at the end of January, and one of the key requirements for doing the rights sale was to overcome a severe cash crunch the company faces, which has forced Byju's to look at some of its assets and its subsidiaries also. Just last week, the key shareholders of the company had held a shareholder meeting and they had called for the reconstitution of the board and also again a stop on the rights issue and any kind of transfer or sale of shares. Baiju Ravindran had and the other founders had skipped this board meeting and had called the EGM as invalid.
And well, with that, it's a wrap on Market Fatafat. But Lisa and Foram, thank you so much for joining us today. We'll let you go on that note. It is time to wind down on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in.